Sales tax is a percentage added to the price of the goods or service at the point of sale. Think about the coffee you grabbed this morning. The coffee itself may be worth $3, but with sales tax, you're paying a little more, 20 cents. Sales tax is there to make the product just a little more expensive. It may look small, but it plays a huge role in funding schools, roads, and public services. Sales tax isn't just about receipts. For businesses, it's a huge compliance challenge. I'm Echo, the Tax Meet Tech Girl, and I simplify complex topics like tax, IT systems, and soft skills so that you can learn faster and smarter. Let's begin. Before we talk about sales tax, you may have heard the concept of indirect tax. Indirect tax is a tax collected by an intermediary, like a retailer or service provider, from the person who ultimately bears the cost, you, the consumer. Unlike direct tax, for example, income tax, where you pay the government directly, indirect tax are built into the price of the goods or services. Examples of indirect tax include value added tax, also abbreviated as VAT, GST, excise duties, custom duties, and don't forget the main topic of today's session, sales tax. As early as 1800s, states began experimenting with transaction-based taxes. In 1921, West Virginia enacted the first statewide sales tax, initially targeting industries like timber and electric power. In the 1930s, the Great Depression pushed more states to adopt broader sales tax due to falling property and income tax revenues. By 1940s, 25 states have adopted sales tax. In 1969, Vermont became the last state to implement a statewide sales tax. Today, 45 states and DC have sales tax. Only 5 states don't, and they're known as NOMAD: New Hampshire, Oregon, Montana, Alaska, and Delaware. Alaska is a bit of the exception because it doesn't have a statewide sales tax, but the local boroughs can still levy their own. Sales tax makes up about a third of the state government revenue and is only second to income tax. Local government, including cities and counties, can collect sales tax too. And most of the time, the taxability follows the state. So if the state thinks it's taxable, it's also taxable in cities and counties, and so on and so forth. However, there are a few home rule states that the cities and counties may not agree with the state on taxability. In fact, the highest combined sales tax rate in the country is found in LaSalle Parish, Louisiana, at around 13%. Because local government can collect their own, which can make the tax rate vary widely depending on where you shop. The taxability of sales tax varies a great deal from product to product, service to service, and from state to state. So first, tangible personal property or good, or TPP. These are items you can touch, move, or measure like clothing, electronics, furniture. In most states, the sale of goods are taxable by default, unless specifically exempted. Common exemptions include grocery, prescription drugs, or manufacturing equipment. Next, services. When sales tax laws were first written in the 1930s, the economy was not focused on services. They were focused mostly on goods. That's why most states still don't tax services by default, but there are some exceptions. 4 states, Hawaii, New Mexico, South Dakota, and West Virginia, tax services broadly, unless specifically exempt. However, in other states, only certain services are taxable. Digital products add another layer of complexity. Music downloads, streaming subscriptions, and ebooks were not around when sales tax laws was first written. Today, many states treat digital goods as taxable, often classifying them as TPP, tangible personal property, even though they're intangible. Local government can also impose sales tax, which means the taxability of the product or service can change depending on where the transaction takes place. The bottom line is sales tax taxability is not uniform. Business must check the rules in each state where they sell because what's exempt in one state may be taxable in another. An exemption certificate is a document a customer gives to a seller. It proves they qualify for a tax exemption like resale, nonprofit, manufacturing, or R&D. The customer fills out the certificate and hands to the seller. The seller keeps it on file. This protects the seller during audits, showing why sales tax wasn't collected. For example, a retailer buying laptops to resell provides a resale certificate. The seller doesn't charge sales tax because the laptops will be taxed later when it's sold to the final consumer. Exemption certificate keeps the transaction compliant. Customers save on tax if they qualify, and the sellers stay protected by keeping the paperwork. So you're buying a tractor. Do you have an exemption certificate?
Exemption certificate. I know I got one of them around here somewhere. Oh, there. Yep, that's it.
Oh, great. I can sell to you tax free. A sales tax holiday is a limited time when the state suspends sales tax on certain goods. These holidays usually last for a weekend, although some may extend longer. They're often called tax-free weekends. States use sales tax holiday to encourage spending, help families save money, and reduce cross-border shopping. They're especially common before the school year, during a hurricane season, or around energy efficiency campaigns. States have the discretion on the timing of the holiday, what products are qualified, and the maximum exempt amount. The rolling screen that you're seeing shows the 2025 sales tax holiday per state. While the customer enjoys savings, retailers must update point of sale systems, train staff, and ensure compliance. Missing an exemption or applying it incorrectly can lead to audit issues. Sales tax holiday may be short, but it can make a big impact. For shoppers, it's a chance to save. For businesses, it can be a boost of sales, but at the same time, it creates additional burden to stay compliant. Damn it, I don't want to go to school. So that's sales tax in a nutshell. Simple at checkout, but complex behind the scenes. We've seen how it funds state and local governments, how rules vary across different states, and why business need to stay compliant. Whether you're a shopper wondering why your receipt looks different or a business keeping track of exemption and rates, sales tax touches all of us. Remember, sales tax isn't just about a percentage. It's about keeping schools open, road paved, and communities supported. Thanks for watching Sales Tax Explained. If you find this helpful, don't forget to like, share, and subscribe. See you next time. Bye.